Welcome to the HC Insider Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. Today, we're talking about technology and how it's driving change in the commodities sector, from how decisions are made through to how trades are registered, and even the talent the commodities sector requires. To do so, we're joined by Simon Collins, CEO of TradeCloud, director of EdgePetrol, and an investor in a number of technology-based startups, and former head of bulk trading for Trafigura. Simon's going to discuss 3 ways in which he thinks technology is going to radically change the commodities markets over the next 5 years. Simon, thanks for joining us.
Hi, Paul. Pleasure to be on the HC podcast.
5 years ago, you were running bulk trading at Trafigura. What got you to where you are now, and I guess the levels of investments and interests you have in technology itself?
Well, Paul, I must say that I found the number of services that you can find on the internet today quite fascinating, from healthcare to transport to education, even love you can find on the internet today. And, particularly my area of fascination was around platforms and how powerful they've become. One of the platforms I found particularly interesting was Airbnb, which is primarily a peer-to-peer platform, and it's parallel with the commodities business, because Airbnb is essentially a marketplace for rental property. But as we know, every single property on Airbnb is different. And that's very similar to the commodities business, where, we do have marketplaces for, let's say, commodity buckets. It could be crude oil, it could be copper, it could be corn, it could be chemical products, etc. But they tend to be natural products or naturally occurring and differentiating themselves. So there was a great parallel there. And when I looked at that, I thought, why not have an Airbnb for commodities? And that's where we came up with the concept of TradeCloud, a platform where companies can make offers, make bids for specific goods across the platform to people that they want to invite, and also excluding people that they don't necessarily want to invite.
Yeah. So I guess this brings us neatly onto your first big prediction for the next 5 years, and that is that peer-to-peer trading, OTC trading, will move, but in 5 years' time will be largely done on platforms, although not all commodities will be on those platforms, and not one single platform is going to be dominant in your view. Before we get there, can you perhaps, because there have been marketplaces for commodities for a very long time, the derivatives, these off-the-shelf products, so to speak. Can you talk a bit about these peer-to-peer platforms and really what are they? What are their commonalities at the moment? And then what problem are they trying to solve?
Yeah, as you mentioned, the exchanges have been with us for a long period of time on the futures markets, and also, of course, for listed companies. And the advantage of trading on exchange is that all the interactions are registered by that exchange. So the exchange knows who bought and who sold and what they did and when they did it. But of course, with commodities, for the physical commodities, then those are generally exchanged on a peer-to-peer basis, i.e. one company trading with another company, and the record keeping of that is individual. Yeah, so I think it's a combination of marketplace, combined with security and record keeping, and combining the technology of cloud and blockchain that is achievable today, which wasn't achievable, let's say, 5 years ago.
Is it technology that's, this concept, this need to have a more efficient marketplace for these peer-to-peer transactions, which does solve, as you alluded to, there's compliance issues, there's financing issues, there's a whole bookkeeping inefficiencies there, but it's been essentially the development of a shared ledger, and maybe you can talk to that a little, what those actually are, that has unlocked the capacity to do these very complex one-on-one transactions and actually have them into a marketplace.
If we look at some of the issues which have been surrounding the market, particularly this year in 2020, and I refer particularly to the situation in Singapore with Hin Leong and a number of other trading companies. Part of the issue is really what happened and when did it happen? And there's no centralized recording of transactions. And that makes it very difficult to understand exactly what took place and when. We can see that there's been a number of transactions which have been purported to have taken place, but the other side is denying that. Of course, if you transact on a platform where both sides have been previously KYC'd and identified, then that's no longer a possibility. And the other thing, of course, is that once you transact on a platform, you digitize that contract, and that allows you to move on to also digitalizing the post-trade services and interactions with other service providers, interaction with inspection companies, storage company, financing bank, shipping company, etc. And also allowing for the interoperability or the connectivity with other service providers such as e-documents providers, as an example.
And all this should both make, I guess, financing of that transaction easier for less specialized banks, if you'd like. But also, it also means the number of human transactions required should reduce the overall costs as well of trading. That's a key differentiating point for these platforms, or key sales point for these platforms. Not only is it you've got that compliance aspect, but it should also drive down costs significantly.
Yeah, I think the key is visibility. If we look at how a lot of trade finance goes about today, it's on a trust basis, which is a concept which is slightly strange to outsiders, that you would trust somebody to provide you with the right information. If you transact on a platform, the platform can validate that transaction and therefore create trust with any party that you should choose to share that thing with, So in the end, what happens is that all parties are on the same page, and therefore we no longer need that concept of trust and all the paperwork that is going with that, such as paper bills of lading, trust receipts, invoices, etc., because we can see who did what and when they did it, as I explained earlier.
Yeah. Which brings us to the point where, in some ways, the prediction is in 5 years, platforms will be a dominant form of how physical commodities are traded. But there are right now significant, I guess, resistors to adopting these platforms. And really that's key, right? You've got this network effect, the need to have adoption. And we've had previous guests on this podcast talk to the fact that the dominant incumbents in the trading world, there is a certain level of resistance to that sharing of information, that the trust aspect. Can you perhaps orientate us as to kind of where you're seeing out there, whether it's oil or metals, which types of organizations are pro these platforms and which ones are resistors, and why?
As you know, Amazon, when they started by selling books, and the booksellers were not very impressed with that at the time, right? So, but they still carried on and persevered, and it became the largest bookshop in the world. So, yes, the incumbents will resist change because ultimately they profit from that. And, that can be anybody who is involved in the commodities business. It's not only trading companies. It can also be, marketing departments of producers, or it can be logistics companies that have tied customers. So I think there will be, and there is resistance to change within the organization, but there is a greater movement afoot in terms of security and compliance, which we think in the long run will overshadow that resistance.
Can you kind of pinpoint for us what exactly is the issue, if they do have it, certain organizations have around these platforms, from a trading perspective? Is it just simply putting all this data into a system? What do you think actually it is the issue that they perceive right now?
I think everybody would, wants to keep their customer base, and that's a logical thing to do. At the same time, as I mentioned, platforms are great connectors. So if you want to run a competitive process on everything that you do, whether that be warehousing or inspection, etc., you can go out through a platform and you can ask for offers for those particular services. if I think about one area which I think is particularly opaque is, for example, oil storage, which has been a very, very key issue in 2020. Who has storage capacity? Okay. And it's not only, the fact that it may, the storage company may have leased that to some other company, and then that company may have, how do we know who has what capacity in the market? It's very difficult to find out. But if you have a platform where you can openly offer that storage capacity or bid for it, then again, that creates efficiency and transparency of availability and cost. So, our belief overall is that the benefits outweigh the downside for those incumbents at the moment.
I mean, you are going to only increase the level of transparency in the market, which, as we know, is, if you're a trading house, is a key, is a challenge to the outsized profits you can make through transformations of commodities, whether that's in time, location, or price, or whatever it might be.
Look, this is very true, but I must say when we designed TradeCloud, we had that in mind because we did realize that people did not want to offer everything that they had and show that to the whole market. Okay, you don't want to show your competitors that you're offering a particular product at a particular price. And that's why we created TradeCloud as a peer-to-peer communications platform rather than an exchange.
Is that the same for all platforms or platforms out there at the moment, whichever commodity it might be? Because there are a number of these platforms starting up where actually they are just completely act like a typical LME or ICE or whatever it might be.
Look, I think platforms are a bit like trading companies. They appear to be similar on the outside, but when you lift up the hood underneath, they're quite different. They have different, trading companies have different risk profile. They have different specialities in products, etc. And from what I can see is that platforms also have different approach to the problem. And we will see over time which approach is the better one.
I guess coming towards that sort of 5-year prediction, some platforms, you've got two different types, right? You kind of have these private platforms such as TradeCloud and a few others, but you also have platforms backed by consortiums. I'm thinking of VACT, for example. Can you talk a little bit to the pros and cons of those, or which type you think, without being as biased possibly, but which do you think, are they just going to be different types of platforms for different markets? Is oil so complex that actually the consortium approach works, whereas perhaps more fungible commodities like ags and metals, you can have one independent platform provide the services that are needed?
Look, I think, again, we're going to see over time what is the dominant technology and approach to this particular problem in commodities. I do have a lot of, I do feel that VACT has been successful in attracting some of the large players, but at the same time, that does create issues, I believe, around governance. Everybody probably wants a seat at the table and a say about what the forward business will be. And Craig Perron, on your former interview with him, mentioned the issue around competition and whether that is an issue where you have the dominant players all being owners of a platform. And I take his point there that could be an issue. But what we've seen here with VACT and Commodities, which is now coming up for the agricultural business, is that they're primarily focusing around the post-trade area. And I can understand that because they do not want to fall foul of the regulator. TradeCloud is an independent platform. Okay, that means we're very much on our own. But I think that from a regulatory point of view, it also makes things simpler.
Yeah. Final couple of questions. And we will talk about, I think, some of the consequences of platforms a little bit later on. But we also don't see in 5 years' time there just being one Amazon, right? Well, one platform that services everyone. And also there's still going to be some commodities that just aren't going to be on platforms at all. Can you talk to a little bit of those two aspects?
Look, Paul, I think that's very true. There will never be one single platform. It's not healthy for the market. I think different platforms will take different approach. For example, we have localized platforms, particularly in the agricultural business, which are very simple applications which are designed for farmers that sell their product fixed price in small lot sizes. And they also work on a local language basis, right? Whereas we have other platforms who are working more on an English language basis for international trade, bulk commodities or containerized commodities. So, there will be different platforms performing different functions. I think in terms of your second point, I do believe there are certain commodities which are more suited to platforms, and that is the more commoditized area. So, for example, we never looked at concentrates markets, base metals concentrates, because most of the conversation is around the quality. It's not really around the availability and the price. That comes later in the negotiation. So we don't really see the opportunity there for people to just offer a particular product onto the platform and then somebody book them on the other side. We just don't think that that's really realistic.
Yeah, any of those commodities that kind of actually really aren't commodities in the sense that their quality sits on a spectrum, even crude oil to some extent, that adds significant complexity, as I understand it, how a blockchain ledger, a shared ledger works.
Yeah, indeed. And, the system needs to be flexible. So, if you want to have a platform which is catering for crude oil, then it needs to cater for all types of crude oil. And that's part of the challenge. In saying that, a lot of people said that the corporate bond market would never go onto platform because there's such a myriad of different bonds. They have different ratings, they have different time periods, hundreds of different companies which are issuing bonds. But over the last 3 years, we've seen an increasing percentage of the market going onto platform.
We've got to overlay this with a world that arguably is also deglobalizing to some extent and forming into trade blocks again. Does that have the potential to disrupt this platformization, to coin a word, over the next 5 years?
Look, not wanting to contradict myself, but it often means that you want to find something specific, right? So if you want to find something specific and who has it, then the way to do that is to go out to many parties. Now, you can do that using WhatsApp and email and telephone, but it's not the most efficient, in my opinion. And there is a feeling there, that the market is actually becoming more and more segmented. Why? Partly because of what you mentioned in terms of deglobalization. We have many duty considerations at the moment, for example, or tariff barriers or non-tariff barriers. But we also have the provenance of goods, which are extremely important today. So where did it come from? Under what conditions was that product drilled or mined? And that's also important, and now we're looking at, the other concerns around, what was the energy consumption, for example, of that particular product? The rise of this green aluminium contract, which the LME are trying to promote, and also some of the aluminium producers themselves. So if we want to have a low carbon aluminium, where do we find it? Do we only go to Rio Tinto or Rusal to find that? Well, sometimes they have it and sometimes they don't. Sometimes they've sold that to a trader, but which trader we don't know. So again, platform can assist you in trying to find that. So, and again, it comes down to efficient allocation of resources. I do believe that platforms, for example, Uber, it creates an efficient allocation of resources. You want to find a car, and the application will find the car which is nearest to you. Equally, if you want to find aluminium, which is stored in Rotterdam, but you don't know who owns it, well, let's go onto a platform and find out who owns it and who wants to offer it at a certain price.
Yeah, I think that's fascinating. Beyond just the ever important compliance, especially in the commodities world, where years of profit can be wiped out by issues, as a result of fines and so forth. You've got these ongoing challenges around finance, particularly this year. But you do have that growing ESG requirement. And we've got an upcoming episode on batteries. And a key part of that is, look, a lot of these components aren't exactly fit ESG standards or environmental requirements, right? And, we are starting to see kind of these platforms will enable pricing of commodities to be discounted or increased as a result of where they come from. So yeah, I find that fascinating. I guess moving along, the second area. So first off, we've got this, you do believe platforms are going to be dominant in the market within the next 5 years, ultimately enabled by new technologies that have come across, but they do solve specific needs. But there are, as we said, some resistors out there. The second one, which I think everyone is on board with and is already happening, you talk about how data is going to become the ultimate source of a company's competitive advantage, not just in how it's collected, but specifically how it's then organized. I guess starting off on this is something that we hear in multiple conferences. Lots of trading houses are talking about the data engines that they have. Can we start off by talking about sort of over the next 5 years, how and where that data is going to start being collected? I think this is that concept of the Internet of Things, that suddenly our pipelines might be much more sophisticated than they have been over the last 10 years, for example.
Yeah, look, I think information has always been a key competitive advantage. The more information you have, then the better your decision making can be. Particularly in trading companies, that's been, something which is very powerful. They have real time information on markets and prices, right? Because they're trading every day. And that is a definite, key advantage. What we have now, though, today is more and more data available. And that means more data available to their customers as well. So is knowing the price the key advantage, or is knowing the availability the key advantage, or is it, a combination of all types of different data, which is basically outsourced and in-house as well? And what we see there is, there's a clear trend in trading companies to hire more data analysts and also to collect more data. What is important, I think, is the presentation of that data. I mean, I know from my own experience being in trading for 30 years, there's so many cases where the traders never touched their internal systems because fundamentally they didn't give them the information that they really wanted. So having data is one thing, and then having that presented on a real-time basis in a digestible format is extremely, extremely important. I mean, what we've done at EdgePetrol, which is a data analytics company for petrol retailers, is really just taking the data that they already have, bundling it up, packaging it, and presenting it in a way which is really something that they can digest. And what they find by doing that is that they can make decisions much more easily. But I think going forwards, when you have more data, and particularly when you have more historical data built up, then this is where, AI and machine learning really comes into play, where we can start to do some predictive analysis on what might happen in the future under different scenarios. And, there's the concept of digital twinning, which is basically taking a real life scenario and modeling that, whether that be, in a human's context or a machine context or a market context, and testing that for different scenarios and different outcomes.
I remember a former guest on this podcast, Daryl Schofield, on the episode on refining, talking about how refiners need to be able to capture more data and better use that data to be able to navigate some of the global changes in the market that's upcoming, especially as a result of energy transition. So I've got a couple of questions. Like the first is this a case at the moment you've got these trading houses that have always been, as you point out rightly, very good at managing data, proprietary information, we should say, who, are increasingly sophisticating their data digestion and presentation models? Are they going to be able to maintain that edge? Or actually, if an integrated major, for example, or an integrated minor, given just how vast their operations are they much more better positioned to generate their own data and then start using it?
I think all companies need to look inwardly about what their core advantages are. Is their core advantage having data because, they have more proprietary data than anybody else. And therefore, like I say, if they overlay that with external data, that gives them a core competitive advantage. Or is it something else that's their advantage? Maybe it's their existing network. Maybe it's their financing capability. But one thing I will say is that if your internal rate of innovation is slower than the external rate of innovation, you definitely have a problem. So, I think it can't be something, you can't ignore it, that's for sure.
Yeah, that sent chills down my spine. So I imagine a fair few of our listeners as well, that statement. The second question I had was, stepping back, will we have in 5 years, do you think, a whole series of independent organizations, applications that generate data around a specific set, right? So whether that's satellite data or just data on pipelines, or will this will companies strive to try and what I mean by that is they're supplying the data and then it's up to the companies to do the digestion? Or will companies strive to kind of, I guess, ring fence and keep their own data internally, and it's going to be kind of a world of competing proprietary data sets?
Look, again, I think companies will have to look infertly and say, well, okay, what is my core competency, or what do I want my core competency to be in the future, right? Am I going to be a data company fundamentally that does trading on the side, or am I going to be, a financier of the industry, etc., or am I going to, ignore all this technology and basically do everything in the traditional way and have, 100 offices in 50 countries and keep contact directly with the customer? That's the real key decisions that need to be made. The only thing I would say, though, is that, for me, technology, it runs in a circle. And there's three key points to that. And that is fundamentally the hardware and how that operates, the software, what runs on that hardware, and the connectivity speed. And what we see is that the circle is becoming more and more powerful. So, for example, everybody's going to be upgrading their telephone from 4G to 5G in the next probably 12 to 24 months, or at least a couple of 100 million people will. They don't really know why they're doing that, but they think it will bring some advantage to them in the future. The speed is going to be significantly faster. Mobile is going to go from being maybe 20, 30 megs, per second to 100 or 200 megabytes per second. So, what is the implication of that? And that's what I think companies need to ask themselves, is that, if we have this future where there's more and more data available, it's moving at a faster speed and we can process it at a faster speed, what is the advantage to me? And that for me is very, very key question, which all organizations should be asking themselves. But again, from my perspective, what I find is that with a digital journey, the experience only becomes better. I think we can all remember when we booked our first EasyJet flight or whatever flight it was online, it was a pretty laborious task, but now you wouldn't really consider to do it any other way. And you would definitely do it on your mobile, so we're no longer going to be chained to our desks. We're going to be relying on mobile, and the whole experience will become better and better over time.
Yeah. And there's a couple of more elements there, right? So all this data does introduce some level of risk. And, we've been having conversations our side around with potential upcoming guests on the compliance aspect of data. Like, for example, in accounting, we have very clear rules about how organizations account for things. And, we have IFRS and Sarbanes-Oxley, all this stuff that we are, I think, going to face. And this is probably a broader society question than just on the commodities sector. But at what point, how are we using this data and how are we storing it? If it's getting so powerful that we're starting to take, just spoofing this, essentially psychometric data on counterparty traders, and if looking at how competitor organizations trade and all this side of things, there's an open question mark there, I think, on how all industries are going to start thinking about the data that they hold and the obligations they have around that, and also some of the ethical side of how they digest that data.
Look, there's some very good points there. I think data raises many, many concerns, and the transfer of data is also very, very important, right? Are we transferring that data in a secure way? One of the things we want to try to achieve is a more secure transfer of data. Again, commodities is a business where, we've got high value cargoes and we're pushing documents around by email, which for me is just not secure. Or we're chatting on social chats, which can't be monitored by compliance department. So if we believe that the hackers are going to become more sophisticated, and certainly that appears to be the case so far from what we've seen in 2020, and also that compliance is going to become stricter and stricter, okay, then we need to make sure that our data is secured, also that it's transferred in a secure way, and also that it can be monitorable by, the relative compliance departments. The other point you raised, which is interesting, is it's not just about keeping data, it's also about deleting data. Because any data that we delete, we need to make sure that we delete that in a compliant manner as well. And any data which is certainly of a personal nature, as we know with GDPR, then that needs to be kept in a certain location, certain format.
Yeah. The other big consequence of this is on the fourth part of that circle of hardware, software, and connectivity is the user. And I'm not necessarily talking about, I mean, of course, all organizations in the commodities sector will need to bring in more data experts, data focused talent. And they, interesting enough, will be now competing with other sectors for that, which means their ESG flags need to be a little bit higher. But actually at the leadership level, you and I discussed off air, just how rapid this change has been over the last 5 years. And I think the challenge that that's placing on organizations at the C-suite, where suddenly the C-suite needs to have a technology strategy, and you need whether it's a CFO or CIO or COO who has that, she or he has that lens and capacity to tackle these questions and orientate them as a competitive advantage for their business. And there just frankly aren't many people out there whatsoever at that level who have sufficient knowledge of this sector and technology and these changes to go around in some ways. I mean, we're certainly doing a lot of searches for those types of people at the moment.
Yeah, and that's interesting that you're doing that, right? Because, we used to call it the IT department, right? And what did they do? They just put something on your desk and they told you, to get on with it. And now it's being, deemed as being a core area, IT. What software am I allowed to have on my desk? How can I use it? What's the security protocols around that? Who can I share this data with? Permissioning, etc. So it's becoming very complex. But we are seeing, more CIOs rising to the boards of companies. I mean, that's on a global basis, but also particularly in the commodities industry as people see that as being important going forwards.
So I guess moving on to the sort of final prediction, which is really a consequence of the other two. I won't steal your thunder, but do you we've had a period of consolidation, significant consolidation over the last decade in across all the different verticals and across all of the different sort of participants. What do you see over the next 5 years? Are we going to see further consolidation, or is this going to be these platforms, this technology going to allow lower barriers to entry and allow some new entrants and new startups?
I think we shouldn't become too fixated with the trading companies. I mean, if we look at the oil industry as an example, for a long time we've had the producer trader, the likes of Shell and BP and Exxon, and now we see the rise, for example, in the Middle East of producer traders, and also we see refining traders as well, because people see that as part and parcel of their business. They need to make forward planning and they need to position themselves. And whether that be on their crude buying, their refined selling, their freight, their storage, etc., it's extremely important. So, yes, there's been consolidation, and we are seeing some of the mid-tier trading companies being knocked out and more scrutiny being undergone by some of the smaller companies. But that does also lead to a question of, is consolidation a good thing? And particularly, is consolidation a good thing for the banks? What they say, don't put all your eggs in one basket. And it would be a shame to move from, to resolving one problem just to create another. I do think there is a place for the small and medium-sized trader, okay? And I do think there is a place for the producer trader. And I do think there is a place for the consumer that optimizes his purchasing power. So everybody needs access to the market, and also everybody needs access to financing. And it's also not to say that the large trading companies want to cater for all areas of the market. Their cost structure is still relatively high. And, that's maybe not something that they want to do. In 2019, for me, was a little bit of a watershed because, we saw in quite a few large trading companies the elimination of external agents. And what that implies then is that they need to set up an office in that particular location where the agent was previously, or they need to stop servicing that location. And that's going to be a decision that they need to make. But again, our belief is that they could find a technological solution to that, to servicing the market, especially at the lower tier, in a more efficient way. In terms of financing, then we certainly see the rise of trade finance funds. And those funds, I think, ultimately will also be technology driven. We see platforms coming like Comgo and Contour, which again, trying to create efficiency in transactions, trying to streamline KYC processes, and trying to create clear identities and permissioning of individuals within organizations.
Because there's one sort of potential argument that actually all of this, the digitization of the commodities sector, the movement onto platforms, the increasing price discovery, the increasing ability to connect, disintermediate the market. For certain commodities, for sure, there is the potential that the current incumbents face an existential threat from outside the sector with regards to just your frankly, your Amazons and your Alibabas of the world saying, well, actually, you know what, break bulk, we can do that ourselves. We can start offering these prices, these commodities online and, you know, take it away from traditional traders. Is that where do you stand on that potential likelihood?
Look, in some ways, I believe that, you know, the commodities sector is the largest e-commerce opportunity out there. In the B2C area, you know, it's pretty much done, right? I mean, we've got, like you say, Alibaba, we've got Amazon, we've got Flipkart, and then we have, you know, other retailers that are trying to push online as well, like Walmart. But they've not only invested in their front end, which was relatively straightforward, but they've invested heavily in logistics as well. So, you know, you combine that with their enormous financial strength. I mean, for me, they have, you know, a company like Amazon has almost endless access to capital, you know, and that definitely raises that question, Paul, you know, is that an existential threat to the current status quo in the commodities business? And I would say yes. And part of the reason for that is also that technology is at the heart of their business, you know, which means automation, you know, and when you have automation, you create efficiency. And when you create efficiency, you lower costs. So, you know, we see trading companies, for example, and other, you know, producers are starting, you know, have either started or are starting to offshore a lot of their operations to cheaper locations. But for me, that's kind of, you know, it has its limits. And once it's done, then it's done. You can't continue to innovate from there. You can't then move from Manila to Mumbai and then Mumbai to Bangalore and whatever. You know, eventually, you know, my strong belief is that you've got to automate those processes. But at the end of the day, unless you know, digitalize the underlying contract and processes, then it will be very, very difficult to create further efficiency.
And what you said for individual companies is true also for the sector, right? If the commodities sector internal rate of innovation is slower than other sectors, then they'll have problems as a whole sector.
Yeah. Look, I think, you know, at grassroots level, we've seen tremendous innovation in the industry, right? If you look at, for example, fracking and shale, I mean, it was a revolution in oil production. You know, it's unlocked enormous capacity at cheap prices. And also in the mining sector, you know, we're also seeing large innovation in drilling techniques, mining techniques, you know, automation, IoT, autonomous vehicles. So, you know, that's all moving to lower cost. And, you know, you mentioned the subject of IoT, which I think, you know, the biggest gains are in the agricultural sector, where you can really monitor the food production from when it's in the soil, you know, monitoring moisture levels, soil acidity, etc., to when it's been harvested, to when it's being transported and finally delivered to the end user. And again, you can increase the capacity through reducing wastage significantly. Because these IoT devices, they not only measure, you know, where the goods are, they also measure where the condition of them are. And, you know, that's why I invested in a company called Roamby, which is doing multiple devices, which measure heat and humidity and vibration and light and all these different aspects of the physical condition of the cargo as it moves from farm to supermarket. And I find that fascinating.
Well, it's been an absolute pleasure to have you on and a fascinating discussion. And look forward to tracking these changes, and many of them are well underway already, you know, over the next couple of years.
Many thanks, Paul.
Thank you for listening. If you enjoyed this episode and want to support the show, please give us a positive review on Apple Podcasts or Spotify. To find out more about HC Insider and Human Capital, a search firm dedicated to the commodities sector, go to www.hcinsider.global, where you'll find more original content on the commodities sector, and more details on our offering as a search firm and our locations around the world. Thanks again for listening.